Good morning and welcome to Join the Dots. Now, this is coming to you towards the end of the week. An awful lot is going to happen this week that I won't have caught yet because I'm recording this quite early. One thing I've noticed recently, looking at other people's videos and the shorts and the generally things that pop up on YouTube, some of them are years old and you don't know it because it doesn't give you a date. I will always tell you the date we're recording because clearly I want you to be aware of when I'm recording this so that you know market moves after I've recorded this I can't see yet. All right, so I mentioned yesterday and I think the day before also, an excellent piece by Grant Williams. So I want you to bring that to you today. I want you to analyse it and bring it to you today. And Grant says, millions of silver stackers about to lose this lifetime opportunity. Yeah, they're not going to lose anything if they stack silver. So those seeking shelter from equity risk are moving into gold. Now, what did we say? We said Gundrich, Wilson, Dalio, all saying 10 to 20% gold. I'm going to bring you one after Grant from the Market Sniper this morning, and this is Tuesday, okay, which will tell you an explosively different portfolio construction for the next 10 years. And funnily enough, as all these things do when you're talking about the best people in the trade, it ties in with Greg Mannarino. Okay, it ties in with Greg Mannarino's thoughts on what your portfolio should be in the next 10 years. Not the last 10 years, forget it, it's gone. Okay, so what Grant says is more speculative money, which was in crypto, was in NFTs, was in meme coins, meme stocks. Do you remember them? All those fads that last for about a month, 2 months, 3 months. Everyone gets terribly excited, price shoots up, pump and dumps, and they get wiped out. Or some win, some get out of the top. Well done. Okay. There were non-traditional ETFs. There were double leveraged gambles with silver, etc. But all those of the past, all those different ones of the past where people have piled in because they're looking for 2x, 3x, 5x, 10x, 20x, 50x, and some of them have achieved it, haven't they? Some of them have achieved 50x, like Bitcoin. Some people came in at 100, it's now 100,000, that's 1,000x, okay? So all of those people will be attracted to silver. This is the beauty, and this is why I say silver will outperform. Gold will do fantastically. Gold should be your base, all right? It should be your safe play. Exter's inverted pyramid, it's upside down. Gold is your safe play, but silver's your exciting cousin. It really is, okay? So he sees a dramatic and speculative surge, not merely shadowing gold. And again, we've said this lots of times, haven't we? We've looked at the gold-silver ratio. We've seen it over 120 at one point. Now it's in the mid-80s. And we know that the average is somewhere around 30, 40, the mean. And we know in a crisis, in a real crisis, we've seen silver, gold-silver ratio at 15. It's 85 at the moment, so that could be a 6 times move, silver over gold. Yet gold will be moving up as well. It will be moving up. Nice and solid, your bedrock. But silver will be pinging past it as the frantic cousin, okay? Because people perceive different things about gold and safety, and different people perceive different things. The safe, the solid, will want gold. The speculative, which are out there in numbers, aren't they? GameStop, do you remember? All those meme coins, all those NFTs. What non-fungible total? They will be going for silver. And they won't stop because once it starts, they'll be attracted and more they'll go for silver. So what Grant sees is the launch of leveraged silver ETFs, and he thinks there'll be a huge attraction, 2 times, 3 times silver. And all the time, Tesla, the military, the solar industry, the EV industry, AI industry, they all have to buy silver. So you've got a massively growing core requirement for silver, which in the last 4 years, as I've explained in previous videos, has seen silver, has seen silver 20% short each year. In other words, the market wanted 1.2 billion ounces, but they only 1.2 billion ounces, but they only produce just shy 980 million ounces. They're 200 million ounces short every year for the last 4 years. Imagine if there's a speculative rush on silver. So this is what Grant Williams sees. And he sees silver, a tiny part of a normal portfolio, become 5 to 10% of significant portfolios. And as we know, Saudi Arabia has bought a lot of silver, hasn't it? So silver represents the speculative climax of the fourth turning, where leverage and risk taking dominates the market. And that happens every time, doesn't it? Every time there's a major move in the market, something, whether it's a meme coin, whether it's an NFT, whether it's a metal, surges and dominates. Silver will be that move. Investors will ignore and dispose of equities and bonds, and they will hoard gold and cash. Exter's inverted pyramid, tip it upside down. Honestly, if you haven't watched that episode, you need to watch it. It's good to watch it. You need to watch it. You need to understand what's going to happen. It's happening in a very small part at the moment, but it's got a massive, massive amount to come. So as the crash deepens, the crash that we see coming, all the past speculation will stop. So all the speculation into those various things that everyone's used to over the last 10, 15 years. And remember, Generation Z has only seen the last 10, 15 years. All they've seen is meme coins, Bitcoin, NFTs, token. They haven't seen reality. They're going to wake up, and they're going to wake up fast. And then they will join the ride. They will jump on the silver train. So what else does Greg say? He says, best line from Wall Street, the film. Everyone knows Wall Street, I hope. Having money and losing it is worse than never having money at all. That's very true. Everyone's had a hit. Everyone's been in markets, has had a hit at some time and really regretted it. Don't regret it this time, So that's that's Grant's take on it. It largely mirrors other people's take, I think. It's a little bit more definite and a little bit louder, but I can see it. Can you? I hope you can, because you never take away that gambling, speculative, 10x hunting mob. They never go away. They just move into different markets. And the market they will see next will be silver. And that just ties in with everything, all the dots we've talked about in the past, about how silver will exceed the rise in gold, but gold should be your bedrock. And I'll come on to one from Francis Hunt in a minute, and we'll go through that. Now, here's a small interruption to the service, but it's a vital one because we have to make this service pay. A lot of you ask, where's best to buy and store gold and silver? And I've seen in past bull markets, I've seen people lose so much money because they just didn't do the research. They didn't look up which companies are safe, which companies are not, which companies have been there years and years, which companies have only just appeared suddenly in a bull market. What does the salesman say on the other end of the phone? What does he try and sell you? You want to buy bullion, he wants to sell you some obscure coin that's worth 10 times gold. That's what happens. It just happens. It's sad, but it happens. It's the world we live in. All right, and people are going to buy gold at the wrong price, in the wrong manner, and they're going to lose money. And that's so sad because the opportunity is so obvious now. So my son and I have been looking hard, trying to find the best people we could work with. And we've come up with, in the UK, we've come up with BullionVault, And BullionVault can store your gold and silver if you wish. That's up to you. At some point, and I don't think it's yet, you might want to take delivery of your gold and silver and have it in your house. But then you've got to have security, haven't you? And then you've got to have silence. No one knows. So there are risks to holding gold and silver, and there are risks to leaving. Okay? But it would be nice if we earned something in the end from this service, because we are providing this service to you. We are taking all these dots, joining them, and giving you, I think, the very best service out there. I honestly do. I honestly do. Now, if you're in the US, we've come across a company called Silver Gold Bull. And again, description in the links below, how you contact them. And again, we find they've got an excellent reputation, all right? So we just want you to be aware, because as I say, every past bull market I've seen the innocent investor, in other words, not the experienced investor, but the innocent investor has gone, rung the number, talked to the person, that person has recognised an incredible margin opportunity. Now remember, sales teams are driven by margins. Okay, they're driven by margins. Yes, they've got a volume target, but margin is their aim. Margin is profit, profit is your loss. Okay, so you need to work with reputable companies, and you need to work with companies who are proven over 2 or 3 cycles, not just this one, because this one will tell you nothing yet. Okay, because we're not really into the serious part of this cycle by any means. Okay. So BullionVault for those in the UK, Silver Gold Bull for those in the US, okay? Those are ones we've done the research on, but you again, please do your research, that's fine. All right, so let's go back to the story then. Well, not story, is it? It's a fact. Let's go back and see what we've got. So I've talked about Grant Williams. I think it's an excellent piece, I really do. Now this morning, I love Francis Hunt, the market sniper. I absolutely love him. And this morning he's on his bike again, riding through some part of the world. I don't know where it is. But, wow, did he hit me as I sat watching his piece. Because he has, last week I talked to you about Jeffrey Gundridge. All right, I talked about Ray Dalio and I talked about Mike Wilson. Now, Mike Wilson was the big one because he's mainstream. So is Ray Dalio, to be fair. Ray Dalio is mainstream. But Mike Wilson is absolutely blue chip mainstream, Morgan Stanley. And he is changing the traditional 60-40 equities bonds into 60-20-20, gold as 20. Now, Francis Hunt, I think, is a lot more conscious of our demands rather than a systemic demand as Mike Wilson would be. Francis Hunt is able to go off-piste, as he shows when he's riding his bike. He actually says it. He's able to go off-piste because he's able to not be part of a system that demands a certain attitude. We know that from the media now. We know it from governments now, don't we? They're all lying. They're just lying because it fits the narrative. We have to go with people who see beyond the narrative. Now, what Francis Hunt did this morning, and it really woke me up when I was watching it, okay? He came up with 50-30-20. And I thought, okay, so it's a little bit different to 60-20. No, it's not. It's a lot different to 60-20-20. It's a lot different. Why? Because the 50 is equities. The 30 is gold. And the 20 is other assets. Now, let me explain it, okay? Actually, I've got that slightly wrong. Let me look at my notes. Here we are. So Francis says 50-30-20. The 30 being 15% gold. So that's in the middle of Dalio and Wilson and Gundrich. 10% silver and 5% platinum. 5% platinum. So, and again, that's the first time I've mentioned that word, isn't it? In all these series of videos, platinum. There we are. There's someone I trust coming up with platinum. I've always felt bird in the hand, gold and silver. I don't need to go hunting. I've got them. I know what's happening and I know I can make an awful lot of money out of it. But here we see, he says 15% gold, 10% silver, 5% platinum. There's your 30% precious metals. So what's the 20? Is it bonds? Nope. Oh, really? What's the 20? Miners. I kid you not. It's miners. So now he's 50% metals and miners, 50% equities. That to me is a much, much more representative hedge where we're heading, and he talks about this for the next decade. So I'm going to link the Grant Williams one for you. Okay, so go through that one. That's the silver speculative one. That's the one where he sees everyone who's used to going into speculative markets heading for silver. Then we have Francis Hunt, who sees the next decade as being equities and metals and miners, not bonds. As he says, the bond market had a 40-year bull market that stopped in 2020. And since 2020, people have lost money if they've stayed in bonds. Just a fact. Look it up. Okay, just a fact. So he sees now, and I'll link Francis Hunt, the market sniper. I'll link that as well. Okay, you'll see it. Whoa, what a change in the market we're seeing. And as you know, I like to join the dots. So where does that fit with people saying like Greg Manarino? Oh, absolutely spot on. Greg has said for a long time now, commodities, 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 commodities. That's where he sees the value in the future. So again, Greg, Francis, Grant, Willem, Jeffrey, Mike Wilson. Who else do we have to add to that list? We have Mohammed El-Erian. But Mohammed this time, in this piece, is not talking about investing. He's talking about jobs being lost in the US. And if I find this piece, I'll tell you what he says. But he actually says, I think basically, that job losses start to spread through an economy. Once you see the first ones, unless it's an incident at that particular company, but once you start seeing industries laying off, it spreads. And I think he's right. So I think we're going to see an awful lot of jobs go. Now, I'll link that Mohammed El-Erian piece. Please listen to him, because he's not one of these YouTubers. He's right in the middle of the corporate system, rather like Mike Wilson and Morgan Stanley. So what we're seeing now, the dots I'm joining are not just these people outside the system. I'm now joining the dots of people inside the system. Mike Wilson, Mohammed El-Erian, people who have to say have to say things a certain way, but they're agreeing with us. They're seeing the same picture. Okay? They are seeing jobs going. That means loss of income. That means loss of consumption. That means auto loan delinquencies. That means mortgage delinquencies. That means pressure on all types of derivatives in that quadrillion derivative universe, which I see liquidity starting to move into treasuries. I think they are the only buyers. Well, them and the Fed. Okay, I think they're the only buyers. People are coming out of the derivative market where they've made a lot of money in the past, and they're going for safety. And in their world, safety is treasuries for now. For now, okay? And again, I will link something else to you. I'll link to you Eurodollar University, because again, it's why are treasuries not going down when all this crisis is happening and all these people are saying get out of bonds, get into commodities, get into gold, get into silver. There are many dynamics out there and many forces out there. It's not a 1 + 1 + 1 = 3, okay? There are tremendous forces out there. And a lot of forces are moving into treasuries because they're moving in before moving out to something else, but they're going in there in the interim because it's safe and it earns a yield. All right? It's safe for now. That doesn't clash with what we've said. It's where they're positioning themselves for now. It's like going into cash, isn't it? You're not going to make anything in cash, but you go in there for a little bit of safety until you make up your mind where you're going to go. All right? So there's a lot in this episode, and I've tried to keep it short. I promise you. I've got another 20 stories here. Okay, but I'm trying to concentrate on the real major issues that determine. So what have we learnt today? We've learnt that we are now going into a period where commodities, not bonds, should make up 40 to 50% of your portfolio. Mike Wilson of Morgan Stanley will say 20% fine, but then he's the system, okay? People outside the system who are generally more able to say things a little bit less systemic, more creative. There's Francis is seeing 50%, 15 gold, 10 silver, 5 platinum, 20 miners. Greg Marino says the same. Commodities, 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 okay? There we go. So it's a big episode. It's the end of the week as far as my episodes are concerned. But obviously an awful lot may have happened between Tuesday and Friday. But I think it will all be positive. And if it's not, it's an opportunity. Remember, if you've got this big story building in the background, buy the dip. The dips are not risks. They're massive opportunities. Okay? Thank you very much.